guys, today we are here to discuss piecemeal distribution of cash. Now before we get into the chapter, let us quickly go through the agenda. Today, we will understand the concept of piecemeal distribution and the procedures involved. After getting a grip over the concepts, we should be in a position to distribute the cash that we have gradually received from the sale of assets to our liabilities and the partners. We should also be in a position to prepare statement of excess capital and statement of distribution of cash. After the topic is over, we are free for the doubt clearance or any queries that you all have. Now let us come to the concepts first. Piecemeal distribution generally happens when a firm is dissolved. Whenever a firm is dissolved, we basically sell off the assets, we receive money from those assets, selling of those assets, and then we pay our liabilities, and finally we pay back our partners. Now talking about realization of assets. What is realization of assets? Whenever we sell off an asset and we get cash, that is something termed as realization of asset. Okay. Now as I told you, this happens when a firm is dissolved. So whenever a firm is dissolved, the assets are sold, but that cannot be sold in one single day. That is sold gradually or in stages. Hence, the payment to partners or the payment to liabilities cannot be done in one single day. So, we receive money out of sale of assets gradually. In turn, we need to pay off our liabilities and to the partners gradually. So, this particular framework is known as piecemeal distribution. Now, the question arises, since we are not getting the entire sale of money from the sale of assets in one day, we are receiving it gradually. So what comes into our mind is, who should we pay first? What preference should we give? What are the steps in which we should make payments? So firstly, we need to pay off our realization expenses. Now guys, what is realization expenses? Realization expenses are those expenses which are incurred for the purpose of selling of those assets. Like if I'm closing down my business, I'm dissolving my firm, I'm selling off the assets. So I need to put up some advertisement for the sale of assets, that I'm ready to sell off my assets so that people can come and buy those assets, or I can hire an agent for doing such ads. So whatever I do, if I put up an advertisement or I get an agent involved, I need to pay some sort of money, either by way of advertisement expenses or by way of commission to the agent. So that all expenses are included in realization expenses. And the first thing that I need to do when I get money from sale of my asset is to pay off these realization expenses. After realization expenses are being paid off, the second thing I need to do is to create a reserve for contingent liability, if any, in my business. For example, I had some bills receivable. Because of need of funds, I got it discounted by bank. Now on the due date, the drawee dishonored the bill that was being discounted by me. So in turn, bank would come to me asking for money that is being dishonored by the drawee. Since there was no liability on that date, it is a contingent liability, I need to pay them off. So I need to create a reserve for that, and that is the reason. The second thing that I do is to create a reserve for contingent liability, if any, that prevails in my business. The third step for payment is my outside liabilities. We'll have a detailed discussion about this. After outside liabilities, we are supposed to pay partners' loan and finally the partners' capital. Now when I'm talking about outside liabilities can be categorized into two main categories. One, the secured creditors, whereas the others are unsecured creditors. Now secured creditors can be sub-characterized into two categories, fully secured and partly secured. The term secured creditors itself means they are secured by a charge on asset. It could be by way of loan, it could be by way of mortgage, pledge, hypothecation. Okay, so it can be in any possible means. Since they are secured, they are having a guarantee. Now that guarantee can be of two types, like secured creditor, as I told you, can be fully secured. So in case the amount of guarantee by way of pledge, hypothecation or mortgage is more or equal to the amount of loan disbursed, then that type of a loan becomes a secured, fully secured one. So if I am having a guarantee of rupees 100, and against that I am claiming it, I am getting a loan of rupees 100 or even less than that, that means that loan is fully secured against that guarantee. Okay. On the other hand, if the amount of guarantee is less and the amount of loan is more, that means I'm keeping as a guarantee of something of rupees 100, and against that I'm getting a loan of 120. So that is partly secured ones, because the amount of out of that 120 rupees loan, 100 is secured against that asset, whereas the 20 is unsecured. So secured creditors can be of two types: fully secured ones, in which the amount of guarantee is equal to or more than the amount of loan, and partly secured ones, in which the amount of guarantee is less than the amount of loan disbursed. Now, after discussing secured creditors, what we have is unsecured creditors. Now, what are unsecured creditors? Unsecured creditors can also be subcategorized into two. One, the preference, that is the preferential creditors, and other remaining unsecured creditors. Now, why preferential creditors? Because these creditors have preference in terms of payment over other unsecured creditors. They mainly involve two, that is government dues like income tax, municipal taxes, GST, etc., and employees dues like salaries, wages, contribution to PF, etc. So these are given preference over the payment of other unsecured creditors. So that means if I am coming to this step, that is payment to unsecured creditors, I would be paying first to the preferential ones, and then I will come to the unsecured ones. So after payment to the outside liabilities is made, we then come to the payment of partners. Now partners may have either given loan in the business, or obviously they would have some capital. In case there is any loan given by the partners to the business, that is being paid first. So out of the partner's claim, partner's loan is being given preference, and first we pay off the partner's loan. Now there can be possibility that we may have sufficient funds to pay off the partner's loan. So if we have sufficient funds to pay off the partner's loan, there is no worries in that. That can be done, and we can go towards the payment of partner's capital. But problem arises when we do not have sufficient funds to even pay off the partner's loan. Now in that case, what happens is we need to settle the partner's loan in the ratio of their claims. For instance, on selling of the assets, I received 50,000 rupees. Against that, I need to make payment to my liabilities. Say it is 40,000 rupees. I need to pay off my partner's loan. Say for example 20,000, out of which A has given 5,000, B has given 15,000, and then the partner's capital, that is of rupees 50,000. Okay, A has 25, B has 25. Now in this case, on selling of assets, I've got 50,000 rupees. Out of that 50,000 rupees, I have paid 40,000 rupees to settle my liabilities. Now what is left with me is only 10,000 rupees. Now against that 10,000 rupees, I have partner's loan of 20,000 rupees. Bifurcation for 20,000 is A is having 5,000, A has given 5,000 loan, B has given 15,000 loan, and partner's capital of 50,000 rupees, A and B having their claims as 25,000. Now since I am having only 10,000, and I don't have sufficient cash to pay off my partner's loan. So in that case, I need to make payment to the partner's loan in the ratio of their claims. Okay, as I told you, a bifurcation of partners loan, A has given a loan of 5,000, B has given a loan of 15,000. So the ratio of the claim is 1:3. So that 10,000 which is left with us, I would be distributing among the partners in the ratio of 1:3. So since I will distribute them into 1:3, no more fund is left. So the remaining amount of loan and the capital will be deficit and will be lost to the partners. So this is something which is to be noted in case of insufficient cash that is left in the business in terms of claims to the partners. In the next lecture, we will be discussing about the payment to partners capital, what is to be done. It's a big concept, so we require a new lecture for that. For this lecture, that's it. We're gonna quickly have a recap of what we have done. We understood that whenever a firm is dissolved, the assets are sold, and then we pay the external liabilities, and finally the partners. Now, when I talk about selling of assets, assets are not sold in one stretch. They are sold gradually, that is in stages. Since they are sold gradually, money is received gradually, and payment of liabilities and partners can also be done gradually or in stages. Now, this particular framework is known as piecemeal distribution of cash. Okay. Now, since I am receiving money gradually, not at one stretch, I need to make payments also in installments. So, what are the preference given? So, first we need to pay off the realization expenses. As I told you, these are advertisement expenses, agents commission for selling of the assets are realization expenses. The second thing that we need to do is to payment of the reserve for contingent liability. Like I gave an example of discounting of bill being dishonored. The third step that we need to do is to pay off outside liabilities, then the partner's loan, and finally partner's capital. When I'm talking about outside liabilities can be characterized into secured creditors and unsecured creditors. Now, secured creditors can be subcategorized into fully secured ones and partly secured ones. When the amount of guarantee is equal to or more than the amount of loan disbursed, those creditors are fully secured. But when the amount of guarantee is less than the amount of loan, then it is partly secured. That means loan up to the secured part is taken as secured, whereas anything over and above that is considered as unsecured. And when I am talking about unsecured creditors, I classify them into preferential and others. Preferential means what? Those having preference in terms of payment over other unsecured creditors. They mainly involve two: the government dues like income tax, municipal tax, GST, and employee dues like salaries, wages, contribution PF, compensation of services, etc. After paying off my liabilities, I come to payment of partners. When I come to payment of partners, preference is given to partners loan over partners capital. So when I am paying off the partners loan, if I am having sufficient cash with me, it's good enough. I can proceed with payment of partners capital. But in case I do not have sufficient cash, then loans are settled proportionately in the ratio of their claims. This is what we have discussed today in our today's lecture. Keep waiting for the next lecture. We will be discussing about payment of partners capital, statement of excess capital, and distribution of cash. Stay tuned. In case you have any doubts, you can contact me. Please feel free to contact me. You can just put it in the chat box and I would surely respond to your queries. Thank you.